Alright guys, so we are back up. Apologies, forgive me. Alright, so we are back up guys. Forgive me, my internet went off. So I had to fix it and we're back up. Yeah. So we're looking at the markets. What has been happening in the markets? We've been looking at the Bitcoin price, the possible resistance and support level, the next possible resistance and support level, and of course, market cycle. We were having a conversation on what market cycle is and why every trader or anybody who is coming to the cryptocurrency space or into trading cryptos or what you want to start buying cryptos. One thing you should know is that there will be days of pumps and there will be days of dips. So there is a bear market, there is a bull market. It's constant, right? So it's constant. There will always be a bear market and there will always be a bull market. You can't tell when it's going to happen. But of course, yeah, technical and fundamental analysis helps you to be able to anticipate them, at a given time. But then again, when you understand this concept, you won't be bothered when there's a dip or when there's a bull. You just know what to do at the right time. And of course, you as well as start mitigating, the losses you could make when the bear market sets in. So that now brings me to a point where you need to learn how to mitigate your loss during the bear market. All right, so there will always be a bear market, there will always be a bull market. Don't allow anyone to tell you uh, something else. There will always be a bull and a bear market, so anticipate both. But what now makes the difference is, what are you going to do? What will you do in any of these situations? That's what makes you keep staying in the market. That's what keeps you going. That's what keeps you building up your portfolio, right? So I welcome you back again. So if you have questions, hit me up with your questions, and it's a conversation session we're having. So I want us to um, look at the market price, the market uh, situation, what is happening in the market, and the possible uh, uh, resistance and support levels, and of course market structure. So, and if there's any coin you've been having in mind or you've been hearing about, you want me to throw more light on, show you on how to research about it before you buy, let me know in the comment section. All right, in the comment section. All right, so welcome back again. Thank you for joining in. Right? Yeah, yeah. So I will take us back to here, the coin market cap. In case you don't know, coin market cap is a listing site for cryptocurrencies. So on CoinMarketCap, you're going to find thousands of cryptocurrencies, that have been listed. That doesn't mean there are no other cryptocurrencies aside the ones that are listed. There are thousands of cryptocurrencies, you know. So CoinMarketCap is one of the listing sites, one of the renowned listing sites, globally, that brings that list cryptocurrencies, according to their market traded volume, right? So you can see on this that we have, if you look at the first, I'm going to highlight it. Just at the top of the page, you will see cryptos, you see exchanges, market cap, 24-hour volume, dominance, and all of that. You will see that cryptos here, we have over 9,435 cryptos. You can, if you can see where I highlighted, just let me know. All right. So we have over 9,435 cryptocurrencies that are listed on the coin market cap. All right. There's another one again, also a listing site. Now listing site is also is no is called CoinGecko. All right. Yeah. This is CoinGecko. This is how CoinGecko looks like. So, but now there is something you should know. So every cryptocurrency, you know, is valued based on their traded volume. So you could see, they are ranked from the first 100 to, the amount that has been listed. CoinGecko has 6,831 cryptocurrencies that has been listed. But at the first page, what you're going to see is the first 100, right? Um, Arranged by their trading volume, 24 hours trading volume, because the sites are for coin market cap. I think it updates every 30 seconds thereabout or so. I'm not pretty sure of the times it updates, but I know in a few seconds it updates, just to keep up with the market action, right? Bitcoin is trading at 50,637.65 cents, $50,000. All right. And at this time last week, today is Friday. Okay, yeah. So Bitcoin started, plunging down, towards the current price from Friday last weekend. But as at Wednesday, I remember Wednesday was when it made its. Let's look at the chart. Wednesday was when Bitcoin made. We'll go to the 7 day, 7 day. Wednesday, I guess, I think was when it made its all-time high. It got to $65,000. Was it 65? Yeah, 60. Where you come on? Where you again? Yeah. Oh, no wonder it's looking strange to me. I was highlighting the all-time high. So let's look at the 7 day um, chart. So it got to $64,000. You can see here, right? It tested $64,000 and came down at about Friday, yeah, 1 week today, it came down to $62,000, right? And it traded sideways, came down to 60, played around 60, 61, 58, and dipped at 53, right? That 53 was on Sunday. Then again, it came back up to 56, traded sideways, and dipped to today is Friday, 48. 49. At the moment, it's at 50. Now, what happened when it dipped to 47? Before I come to what happened, I would like to um, refresh our memory again when I talked about, yeah, so we're recording on Zoom. So when I talked about market cycle or market structure, right? When, as a trader or as someone who is interested in cryptocurrencies, as a trader or someone who wants to buy cryptocurrencies, regardless of how many you want to buy, or you want to be um, an investor, or you want to be a day trader, whatever it is you want to do is your choice, right? It's important you understand how to um, read the charts, the different time frames, how to also apply indicators. It doesn't matter if you're dealing or if you're buying every day. But of course, if you're a day trader, if you're a trader, you should know that these things are important to you, right? So we're looking at a 7 day chart, and today Bitcoin is trading at $50,000. It went to a deep $47,000 earlier today, right? That was about 8:49 a.m. But then looking at this chart, just looking at this chart, you feel Bitcoin is falling. I mean, it's going to go back down. I mean, it's going to go, there's going to be more deep. Is it possible? Yeah, it's possible. And is it also possible that it's going to, go back up? There's going to be a bull run, another bull run. But generally, you should know by now that we're on a bull run. Forget it. Whatever anyone is saying, what I want you to know is that from my experience, we are still in a bull run. All right. So and if you were in the space in 2017, 2018, you understand, you have a good picture of what a bull run looks like and what a bear run looks like, you know. So and you will agree with me, if you observed, if you were in the space between 2017 and 2018, of course 2017 was a bull run, all right, for crypto after the 2016 halving. So there was bull run, massive bull run in 2017 that's spilled into the first few months into 2018. But then if you observe, or if you were in the space, you would have observed that there is nothing new that actually happens in the market. What I mean by that is there is a trend, there is a pattern. There is always going to be a massive bull run, and there's always going to be a bear run, right? You would have experienced that, and you would have a good picture of how a bull run looks like. And now, why 2021 bull run is different from the other bull runs we've experienced in the cryptocurrency spaces. Right now we have a lot of new hands, a lot of new guys, a lot of hedge funds, a lot of governments who are trying to explore, cryptocurrencies, or who are already accepting the concept of blockchain technology and cryptocurrencies and payments, of goods and services with Bitcoin. I mean, a lot of organizations, look at Tesla. You can now walk into Tesla and pay for your dream ride with just, your Bitcoin, right? You can buy a couple of electronics, or a couple of things on Amazon, but same thing. So there are a lot of platforms, there are a lot of things you could do with cryptocurrencies these days, that you couldn't do in 2017. Cryptocurrency, is now very accessible to a whole lot of people than it was in 2017. I mean, in 2017, if you wanted to buy cryptos, you needed someone who will help you. I mean, it's like a job on its own. You need to get someone who is going to help you to get to. There are not too many exchanges then who will help you get into an exchange, buy your crypto to you, help you save your password and all of that. But I mean, almost anyone can set up a cryptocurrency wallet or set up a cryptocurrency exchange account, comfortably, even when it's just their first time hearing about Bitcoin or whatever exchange. Maybe Binance, maybe Hotbit, maybe Bilaxi, maybe a lot of exchanges. We now have more options of exchanges these days, unlike 2017, 2018, right? I got into the space in 2017, so a lot of changes have happened, a lot of acceptance, you know a lot of acceptance have come, a lot of acceptance, is being enjoyed in the crypto community and the crypto space now, more than it was in 2017, 2018, even in 2019. I mean, crypto started getting attention, a whole lot of attention, in 2020, late 2019, 2020, right? So I mean, regardless of when you got into the market, there is just a foundational knowledge I wish everyone could have, and that is number one: cryptocurrency is a movement, right? Is a movement to break individuals loose from the shackles of the centralized banking system of their government, and also to give you freedom to be able to hedge your to be able to hedge maybe your funds, to be able to hedge um your value digitally, right? Cryptocurrency gives you that leverage, it gives you that opportunity, right? So a lot of things is beyond just making payments. You can actually hedge your funds. You can actually hedge your savings in cryptocurrencies, right? You can now choose to either trade cryptocurrencies for profits to make ends. Not that word. I won't use that word. Trading cryptocurrencies is more than making ends meet, right? You can trade cryptocurrencies and make it as a career, right? And from your proceeds, you build your life. There are a lot of traders who make a lot of in the space every day. But then there are different categories of traders. That is not our topic for today. What is our focus? We're talking about market cycle, the next possible resistance level, and of course support levels. And why did Bitcoin dip to 48, $49,000 today? Now, I want to take us to there was a news from the White House, of course. Joe, how do you guys pronounce that guy's name? Please don't laugh at my pronunciation. Joe Biden, yeah? All right, so Joe Biden proposed, to the Senate that he wants Americans, who are into stock trading and just give me a moment, I'll get that news for you guys. Uh yeah, yeah, so he's proposing that if from a 23% tax payment from traders of stock. So you want traders of stock now and traders of cryptos to start paying a tax of, I think, 48% thereabout, you know. Just a moment, I'll get that news for you. All right, so here it is. That news should even be on Cointelegraph. All right, so look at it. It says Joe. It said Biden's tax plan prompts crypto sell-off, forcing Bitcoin below 50K support line. The 50K mark is reviewed as a key support threshold for Bitcoin reaching high prices. All right, so it was his news. Let me take you guys through the news. All right, so cryptocurrency prices are falling across the board, ending a recent rally for Ether and pushing Bitcoin below the $50,000 mark. Bitcoin has fallen more than 10.4% in the last 24 hours to 48,770,000, while Ether dropped 11.6% to $2,194. And XRP, that's Ripple, more than 20% to $1.04. Prices are prices are as of 8 a.m. best on 23 April, according to data from Luxembourg-based exchange Bitstamp. All right. So the $50,000 mark is reviewed as a key support threshold for Bitcoin reaching higher prices, meaning its fall below this point could knock investors' confidence and push the cryptocurrency into correction territory. Now, all right. So Joe Biden came out with his proposal, his tax proposal, that um, stock traders and cryptocurrency traders should be paying a 48% on task. I want to highlight that for you guys. Okay, let me see this. Say the sell-off occurred following reports of US President Joe Biden's comments around the launch of capital gains tax reform that would affect the country's ultra wealthy far and wide. The White House is planning to nearly double CGT for those with earnings of $1 million or more, taking the rate to 39.69%, right? So this is his proposal. He wants the percentage for returns. I mean, yeah, for tax paid by those who have, of course, one who have portfolios in stocks and cryptocurrencies above $1 million to pay 39.6%, right? And this caused fear and uncertainty, doubt, fear, uncertainty, and doubt. So when you see cryptocurrency guys say FUD, that's fear, uncertainty, doubt, right? So that's what it caused. So of course, got into crypto because of the people who got into crypto, who got into Bitcoin, who are holding Bitcoin because of the uh, the pump, right? So there are people who are coming into cryptos because of the pump. They feel is the next big way to make some quick bucks. There was a post I made, in my status. I said something. I said beyond the moon and the Lambos, right? Cryptocurrency is beyond that, beyond the price getting to the highs or getting to the lows. There is more, and that is what we should start focusing on. Cryptocurrency is more than coming into it with mindset of making some quick bucks. Is it possible that you're going to make some quick bucks? Yes, it's possible, but that shouldn't be the drive, because if that becomes the drive, and it now takes you some time to start making some reasonable bucks, you will start feeling bad. Or you now make some bucks and somehow the market dips and it takes, maybe half of your portfolio off, you know, that will make you want to sell off your position and lose out. Beyond that, you should understand that these things are bound to happen, but you should also you should keep up with what is happening in the space. That means you should be able, at this point, if you've not started mitigating, for these kind of situations, that means you're doing wrong to yourself, right? But if you're just coming into the space and you're wondering, how do I go about it? There are ways you can mitigate, for losses in situations or in market situations. News that the American president, his proposal on the next tax bill, that was what caused the dip for Bitcoin, and it went from 50 to coin market cap. Let's look at the 7-day chart. Let's look at the 1-day chart, because uh, that news was made sometime. I think it was made sometime. Yeah, today, sometime today, this morning. Yeah, today. The news was posted today, though. So now you could see that from 52K yesterday. So market open. Let's go to today, uh, Friday, right? So market was trading sideways until today, from 52K until today when it got to it was still trading 52K today, right? Until when it got to 51K. When it got to 51K and went down to where is that 40? Where is that 40K? Yeah, and went down 47K. Whoa, it got deep down to 47K. I think that was about, yeah, the same time when that news was published. You could see that it's about eight. Come back here. It's about 8. Where is that 47? 8:54 a.m. Right? Let's go back to this website where we found the news. You could see that it was posted today, 8:22 a.m. So after this news went public, the weak hands who felt, whoa, this is going to be a big blow to Bitcoin. I mean, the government has come for Bitcoin. What the doom that has been predicted is coming to pass. There are those who come into this space having that kind of mindset. They are just hoping that, oh, this is a bubble. People have been saying this is a bubble. Let me just get into it and take what I can take, while it still lasts. So when they just hear news that seems, whoa, this is it, they are cashing out their positions, they are liquidating their positions, and they're running away. And funny enough, these guys are not only guys who have small positions in the market. Somebody who came into the market with $1 million could also come in with this mindset. And when the market shakes off and he loses 20% of his or he anticipates with this kind of news, he anticipates he's going to lose maybe 20% of his portfolio. The guy can always pull off he can always close his position, pull off his funds into USDT or liquidate into cash. So a lot of people do this, a lot of people do this, trust me. And regardless of any news that comes to that comes to the space, one thing you guys should have in mind is a lot of governments, right, have come against Bitcoin in the past. I could remember in 2017, that was when China was trying to come up with a ban and their policy and all of that. I mean, China. China is a more regulated nation compared to other countries. China is not as porous as, I mean, they could, if they could control their internet, I mean, the access to internet, I mean, what else can they not control? So they are so, I mean, these guys can do it. And if they could come up with a ban proposal on Bitcoin or cryptocurrencies, yet they couldn't. I mean, think about it. Not only China, there have been times that the parliament in US, or the government or somebody in one of those offices says something bad, or maybe an investor, a renowned investor says something bad about Bitcoin or cryptocurrencies. There is always this tendency that the price is going to plunge. And now there is always this tendency, trust me, it's going to happen. And why it's going to plunge? Yeah, why it's going to plunge whether now or in the future is because there are those who we refer to as the weak hands, who are going to take out or close their positions, liquidate their funds and walk away and come back maybe when they feel the market is getting excited again. But most times, a lot of these persons, end up losing their funds. They end up losing their funds because when your portfolio is being affected by the dip, right? From history, right? I mean, when I mean history, I mean from the early days of trading cryptocurrencies. You will know that cryptocurrencies that have this kind of value that Bitcoin has, they are going to come back up, right? There's always going to be a dip, and there's always going to be a moon, right? There's always going to be a rise, right? So this is normal. It is very normal, guys. Very normal. So have this at the back of your mind and have peace. Trust me. When you understand this, right? When you understand this, you won't bother yourself about what the market is happening. But of course, if you're a big player in the market, you should be able to follow the market. So when you follow the market, that's one of the ways you'll be able to stay ahead of all of these dips, and not you cannot always avoid deep portfolios, but you can always mitigate it, right? You can always anticipate it and mitigate it, right? So that's why you should be a keen follower of the market activity, right? So let's go to Cointelegraph and let's see what's happening today. Cointelegraph is one of the reliable news websites for cryptocurrencies. So there is no need being in cryptocurrency if you're not ready or willing to be a researcher and also to read and learn. You have to. Nobody can do it, better for you. Nobody can do it better for you. Unless you just choose, you just want to put your money and just leave it there. And it's beyond putting your money and leaving it there. There is more to cryptocurrencies. There is the part of building a career in cryptocurrency, right? There is a part of I was telling somebody, I was telling someone I consult for, I was telling the person, I said, it's high time we start looking at staking our cryptocurrencies. So beyond just buying your cryptocurrencies and leaving them in your wallet, hoping that someday the price is going to rise to whatever amount you dream of, you can make more from staking your coins, as it were, right? So whatever coins it is, maybe you're staking some let me take you to coin market cap. There are a whole lot of ways you can stake your cryptocurrencies. A whole lot of cryptocurrencies, offer that service for their users. You can do that on Cardano, you can do that at Polkadot, you can do that on Uniswap, you can do that on Uniswap. Um, yeah, on Binance, you can stake Chainlink, you can stake almost any coin that is available on Binance. Yeah, and some of these coins, some of these projects, they have their main net where you can also stake them. Now the advantage of staking these cryptocurrencies on their main net is they give smaller holders opportunity to stake, right? And also they also, yeah, they give smallholders opportunities to stake, bringing down the limit unit you have, right? But on Binance, there are some coins you can't stake on Binance if you don't have up to 1,000 units of that particular cryptocurrency. But if you're staking on their on their main net, yeah, on their native main net, they give you options of staking with lower limits, of units, and of course with with higher APY. APY means annual or annualized percentage yield, right? Let me take us to Harmony and give us a big picture of what I'm talking about. Let's look for Harmony. Yeah, I was taking us to a different. Yeah, so this is Harmony, right? Right now, it is dipping. It is dipping. It is at minus 8.65%, right? Aha, it's an opportunity for you to buy 10 cents, right? It has gotten to 22 thereabout cents you know, in the past couple of weeks, but it's trading at 0.10 cents right now. Great opportunity for you to buy more Harmony coins. Now, I will tell you why I'm so big on these coins, right? I might not be able to tell you everything tonight, um, but I'll tell you why. Now, Harmony is a decentralized blockchain network that offers, okay, let's read what it is about. This is the price. Okay, this tells you about the current price in the last 24 hours. But I want us to look at what this project is about. What is Harmony? Harmony is a blockchain platform designed to facilitate the creation and use of decentralized applications, dApps. The network aims to innovate the way decentralized applications work by focusing on random state sharding, which allows creating blocks in seconds. According to the project's website, Harmony is expected to introduce cross-shard contracts and a cross-chain infrastructure by the end of 2021. Right? All right, I'll try to explain what this means. I don't want to go into, when you go to the website, you'll be able to see who the founder is. Of course, these are some of the things you should pay attention to when you want to put money into a new cryptocurrency. So maybe before we go back to the news I wanted to show you guys, or the platform where you should be looking out for news every day. Before I take you guys back to that website and maybe call it a day, I want to just throw more light on what this grammar that I just read out to you, what it means literally. and maybe talk about who the founders are, because before you get into any cryptocurrency, why we tell you do your own research, right? Is for you to be able to read, research, read, and see for yourself what the project is about, right? And be able to figure out if it's a project that has a real-time use case, and decide for yourself that you want to buy into this project, because buying a cryptocurrency or a coin means you're buying a share into the project, right? So that is going to inform the way and manner at which you buy cryptocurrencies. That will make you to start taking responsibility for whatever your decision turns out, right? So that's why we tell you, no matter what we tell you, do your own research, because your own research is going to help you to take responsibility, because you've read, if you research for yourself, you read for yourself, words for words, lines for lines, right? That is a demonstration of taking responsibility. So wherever, if you now decide that you want to put in your hard earned money and get into some cryptos, that means you're taking responsibility. If in the next day your money turns out to be, a cent, or like this funny video that goes viral anytime the market dips, where you say it will take your money for vanishing. Right? So you can put your money into cryptocurrency and your money will go for vanishing. Right? So it's possible, guys, but it's still possible for you to have your money in cryptocurrency, and the money, just, makes you some reasonable profit, you know. But then it doesn't happen always, but it happens. But how then do you keep winning even when there is this kind of experiences, or there is this kind of market um, action in the market, or this price action rather in the market? What would you do to still be in the market, to still be in a good position to um, trade? Right? So what makes you a trader, or what makes you an investor, is when you're able to manage the risks and still stay on top regardless of the market nature at that time. All right, so guys, so let's talk about what harmony literally means. So I've read out to you what it means on paper, not on their site. Okay, this is their site, yeah? Yeah, so what this means is harmony is building a cross-chain network where you'll be able to build applications that can relate to themselves. Applications on Ethereum network will be able to relate to the applications on Harmony network, because Harmony is a blockchain network on its own. So it has a mechanism or a protocol where um, applications that are built on different blockchains. Trust me, guys, there are there are a whole lot of blockchains. So when we talk about blockchains, it's just a general name for networks. There are different networks in the blockchain space, right? So Harmony builds a protocol, or has a protocol that enables the communication of these decentralized applications, from different blockchains amongst themselves. So that's literally what Harmony is building, right? So if developers who are building applications on Ethereum network can as well link these applications to be able to access services, right? And yeah, and services and whatever it is on um, on another blockchain network, or maybe Cosmos, or maybe Ethereum, or maybe Binance Smart Chain, whatever blockchains network available in the space. But that is not what we are talking about today. I just want to stick to the market structure, price action, and possible resistance and support level. So please go to the site, go through CoinMarketCap, you search for Harmony, go to the site, do your own research. Of course, like I said, when you're doing your own research, you should research about the founders of the project, right? So on the website is usually a white paper, a roadmap, and all of that, right? Look for it and study what that project is about. So here, right on here, this is on CoinMarketCap. So if I go to their site, it's going to give me that option to be able to see what the white paper is about. Let me just a moment. Let me take you guys to the um, website. Yeah, so we're headed to the website. So on CoinMarketCap, if you want to research on any cryptocurrency or any coin, just come to CoinMarketCap, look for the search bar at the right top corner of the screen and type the name of that crypto. If it's listed on CoinMarketCap, it's going to pop up. When you click on it, you look for um, under it, you come down, you see some tags: website, explorers, community, chat, source code. Click on the website. The website is going to take you to their native website where you'll be able to see what the project is about in details. I'm trying to open up Harmony for you to see. So this is how Harmony's website, their landing page looks like. So this website explains in details what, there's a word I made mention of: sharding and staking on mainnet, right? So you're going to see all of that. You're going to see the features of that protocol. Now, this is in comparison to other blockchains, to other top blockchains. There's Ethereum, Ethereum 2, Cosmos, and Polkadot, right? And of course, right, most recently there is Cardano. There's a lot of them, but I think um, the strategy here is just those ones that are mainstream, right? So you can see the transaction finality of Harmony's um, blockchain confirmation on the network. You could see the comparison for Ethereum, Ethereum 2.0, Cosmos, and Polkadot, and you can see the validators, transaction fees, and all of that. But this is not what we're talking about today, right? Now, this is a comparison. They are trying to give you a comparison, of their protocol features compared to other blockchain protocol features, right? So that's what this graph is about. So I want to take you guys back to, remember, when you're researching on any coin, come to CoinMarketCap, search for it, click on their website, make sure you read everything you can on their website. The roadmap, um, I want to get it for you guys here. Da, 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 da. All right. So this is like their white paper. This home page has almost every detail you need to know, and that's what is contained on a white paper document. So most, networks with write it out, white paper roadmap, right? Yeah, so most platforms have that written out boldly, but this landing page has every detail that is contained in a white paper for on Harmony, right? So go read about it, and I encourage you to buy Harmony if you have the funds, right? So make sure you read about it, and each of the founders, how you do your research is each of the founders, right? Google about them, check out their social media platforms, because it is almost a law that in cryptocurrency projects, those who are associated with the project, their details will be made known, will be made public. So their LinkedIn account, their Facebook, Instagram, the most active platforms that they have is listed on the page, where individuals will be able to do research, because you have to look out, look into what they are doing. What are they doing? you know these guys said they are into, let's say they are into 1 second cross-border transaction finality. A cross-border transaction finality, that's what they say they are into. They are building a project like that, yeah. And they now have, board of members, founders, team members, and all of that. And you're making your research and you check, maybe the founder, check his social media platform, and what he's been engaged with, his conversation is nothing to do with cryptocurrencies in the last 1 year or in the last 4 years, right? There is nothing related to cryptocurrency on his page. That is already a red flag, especially for the founder, for the team members, there should be a level of consistency. Then you look at the history of where they've worked, right? So these are some of the things you should look out for when you're making research. So maybe they say this in the, okay, let's look at this guy now. This guy is Steven C. Steven C has been obsessed with protocols and compilers since high school. He reverse engineered ICQ and X11 protocols coded in OCaml for more than 15 years. Can you see that? And graduated with a doctoral degree in security protocols and compiler verification from the University of Pennsylvania. Can you see that? So what he even studied is in line with what they are building, right? So these are some of the things you should look out for when you're doing your research on any projects. When you're looking at when you're researching about the founders or the team members, look out for what they do, what they studied, right? The project they've built or where they've worked, their social media platforms. Look out for their conversations, look out for their collaborations, look out for what they've been engaged with. This is what is going to help to drive your decision. When they are not consistent, with the space or what they are projecting, is already a red flag, right? So that's it for one of the things you should know. Maybe I should do a video, do a content, and let you know things you should look out for before you buy a project, or how, or maybe the title should be how to do your research. I think that will help people a lot to be able to streamline what they should look out for when they are researching on any cryptocurrency, and it's going to help them to make their decisions, right? So that's that, guys. That's that. So I'm taking you guys back to one of the platforms you should research on every day, right? Like I said earlier on, if you want to be relevant, and if you want to be relevant in the space, right? And you know, go beyond just making transfers or buying cryptos and expecting Lambos, right? If you want to go beyond that, make it a point of duty for yourself to be able to read every day almost anything about cryptos you can get, right? Go for what is happening, right? Because there are a whole lot of news, there are a whole lot of innovations, there are a whole lot of startups, there are a whole lot of news that affects the price, the markets, the nature, and the future of the space that you need to keep up with. So one of the sites I'm going to introduce to you guys today is Cointelegraph. So you just go on your search bar on your browser, you search for cointelegraph.com. So Cointelegraph.com is a reliable, renowned cryptocurrency website, right? So every news you can almost expect or you've heard in the past or you're going to hear in the future, I can guarantee that you will find it on Cointelegraph. So right about now, let's look at the current news today. No, this is 2019. Let's go to news. Let's go to just a moment. Let me refresh this page. All right. Yeah. So it was showing me an article from 2019. That was why I kept refreshing. By default, it's supposed to bring me to the trending news. All right. So you can see that, okay, this is one of the trending news. Plan B speculates that BTC price fall doesn't mean the end. Right? Like what I was saying. Right? Then Nexus Mutual moves to sunset legal entity, lifts KYC requirements. Do you understand what let's look at that news. Let's look for it. Here is it. I want to explain. It was published 3 hours ago. It said Nexus. I don't know how you pronounce that. Permit my pronunciation. Nexus Mutual moves to sunset legal entity, lifts KYC requirements by transitioning to a fully DAO, means decentralized autonomous organization governed model. Nexus could expand its user base and iron out economic friction, right? We'll go to the body of the news. So here it is. In a move that could point toward greater decentralization and wider access, the Nexus Mutual community is currently considering a proposal to sunset the coverage protocols. Let me take that again. In a move that could point toward greater decentralization and wider access, the Nexus Mutual community is currently considering a proposal to sunset the coverage protocol's legal entity and lift Know Your Customer, that's KYC, key burdens currently necessary to interact with the platform. Now that means this platform, Nexus, they want to build a protocol, they are building a protocol, proposing a protocol that will make them move to a network where users will no longer need to provide their KYC documents, right? So you'll be able to interact, buy and sell wherever, or interact with other services and products on their platform without providing your KYC documents. That's what this first paragraph is telling us. The proposal was announced on Thursday in a tweet by Christopher Heyman, co-founder of investment fund 1KX. In it, Heyman notes that Nexus originally launched with a UK-based limited company in order to protect the team from legal liabilities and tax-related issues. So here, this tells you the reason why they were demanding KYC at first, right? Of course, the location where they were based, UK, there's no how you can do such kind of business in UK. It's impossible for you to do a business in these developed nations, UK, US, without, paying tax, without being registered with the government. If you don't want trouble, especially when it's a business related to the financial market, right? So the reason why they were asking for KYC verifications when they started up is because they are based in the UK, and of course they wanted to be protected. They wanted to protect their team from liabilities. You can't predict what might happen to people's funds, and of course from penalties that might come from tax, default, right? From the company as a whole. So here is the tweet from this guy, Christopher Heyman. He says, attention, Nexus Mutants, that's of course, he's referring to the Nexus community. Nexus Mutual is evolving. We are launching Operation War Turtle with the goal of sunsetting the legal entity behind Nexus Mutual, which would remove the requirement to KYC for NXM token holders. So this is a good news for the holders. Let's continue with the news. Let's finish up with news. However, Hyman argues that the Decentralization Autonomous Organization, the DAO, if you remember, with over 3,005 global members, is now sufficiently decentralized and no longer needs a legal wrapper in the form of a limited company. In addition to shedding a superfluous legal entity, the proposal also argues that the user KYC requirements have grown onerous and is limiting Nexus growth. And that's the truth, because KYC hinders is almost hinders, right, the adoption of cryptocurrencies. The idea for cryptocurrencies is to unbank the unbanked. And one of the reasons why there are a whole lot of people who are unbanked, especially in this part of the world, is because of the stress they go through in being banked, the stress of providing KYC, the stress of coming to the bank to follow due process, to sign documents and all of that, right? That was one of the things that Bitcoin or cryptocurrencies, that is the idea, one of the ideas behind the creation of cryptocurrencies, to be able to break that bridge, to unbank a lot of people. So without people, in the inner cities, without them looking for banks, walking miles, and looking for banks to be able to receive or pay for goods and services abroad, you know, Bitcoin now brings it, or cryptocurrency now brings the opportunity right, on their palms. As long as you have a mobile phone and an internet connection, you can play in the cryptocurrency space. You can be able to receive funds, for payments of services or goods, regardless of where you are, right? That is the idea. and be able to pay for products and services from the spot where you're seated with just a couple of clicks. That is the idea. That is one of the general idea behind cryptocurrencies. To be able to bank the unbanked, to be able to have individuals, people, hedge funds, hedge their funds or hedge their savings, their life savings, on on a system or on a protocol, on a mechanism that will be able to um they'll be able to take away inflation and be able to give them value for their money as much or as long as they keep their money. That is the ideas, part of the ideas for the creation of cryptocurrencies, right? We can't get into details, so we can't get into too much details about the concept of cryptocurrency, but that's one of the basic knowledge of what of the basic knowledge behind the idea of the creation of every cryptocurrency or Bitcoin as it were, right? Is for individuals to be able to receive or play in the financial global stage, to be able to receive payments across board in cryptocurrencies without going through any third party, without going through a bank, without going through a payment gateway. You know, they will be at the comfort of their home or or at their comfort and pay for services and products or goods or receive payment for services and for goods without the hassle that is involved with third party platforms, right? So that's the concept, that's the general concept behind the creation of cryptocurrencies, and of course the idea of hedging your savings, hedging funds in cryptos with the hope that the value is going to appreciate for you to take out some reasonable profit. Those are some of the major ideas behind cryptocurrencies. So that is what this guy pointed out. So for you to operate as an organization, a financial organization as you were in crypto in US or UK, to be able to offer services to maybe guys who trade in cryptocurrencies or any of the financial instruments, you are required to register your company and pay taxes. So we're looking at the news that came from Nexus. So why every cryptocurrency, almost every cryptocurrency exchange, except those ones who run on a privacy blockchain, requires your KYC for you to be able to use or to navigate on their network, is because they want to keep track or maybe where they are operating from or where the service is reaching out to you. The government requires that they have data of their users in case to be able to help government and entities fight against cybercrime and all of that. So almost every cryptocurrency does that, but there are some platforms like, of course, these days where you have decentralized exchanges like Uniswap, PancakeSwap, and all of that. You don't need all of this. You don't need all of this hassle. It's just for you to have the application, that the web app that supports any of these decentralized exchanges, and you go in there and buy whatever cryptocurrency that is you want to buy. So moving away from that, we'll look at his words for his quote. He said, "Why these efforts protected Nexus Mutual during the early days of inception? These limitations also imposed barriers. Why these efforts protected Nexus? Now they are telling you why they imposed a know your customer process. So they say why this Nexus Mutual during the early days of inception, these limitations also imposed barriers. You're welcome, sir. I greet you, sir. It's a pleasure to have you, sir. All right. Yeah, so like I was saying, I was highlighting um, the quotes of this guy, this very guy. So these limitations also impose barriers to global permissionless participation and ownership of Nexus Mutual. It complicated the user journey of acquiring smart contract coverage, prevented individuals from certain countries from participating in Nexus Mutual, and represented a challenge in proper distribution. The NXM token to the DeFi ecosystem. Now, I was talking about, before I got here, I was talking about how you can avoid know your customer processes these days because of the existence or coming on board of decentralized exchanges like PancakeSwap, Uniswap, and of course, a lot of them on board right now. There's 2C as well, So there is a way with these decentralized exchanges, you can buy cryptos on these exchanges without going through the process of providing your KYC documents, right? So, for the benefit of those who just joined us, this is Cointelegraph. It's a website where um, someone or individual who are interested in cryptocurrencies should always look out for, breaking news every day. This is it, Cointelegraph. Cointelegraph is a renowned, reliable cryptocurrency website, where cryptocurrency news website. So anything related to cryptocurrencies, or blockchain, you know, breaking news happening now, you get to find on Cointelegraph. They're not paying me to do this, but I mean, I'm doing this for the benefit of people who are of those ones who will be able to watch this video, who are interested in getting to know or receiving first-hand news, because it's important when you're in the cryptocurrency space. It's very important for you to always have first-hand news on breaking news, what is happening, because almost every news affects cryptocurrency, especially when a certain cryptocurrency is mentioned in the news. All right, the news, that's what we call fundamental analysis. When you learn professional trading, when you learn trading cryptocurrencies professionally, you hear the terms fundamental and technical analysis. So fundamental analysis is basically trading a certain cryptocurrency or trading the market based on the news. That's what fundamental analysis means. I just gave you guys a free lecture on that, but that's anyway. So we looked at this news. This news was posted 3 hours ago, and Nexus is a platform, is a blockchain platform, and it has its own native token, right? So it has it is proposing a protocol that will allow the users to be able to interfere, or to be able to um, use other applications from their native network, right? So it is just like we looked at Harmony. It is building a protocol where their platforms will be able to interact in their platforms without KYC. So for new users who are going to be coming on board, they don't need to provide a KYC to be able to interact in the platform. So that's what this news is about. So if you look at the body of this um, website, you'll be able to see other news that might interest you, right? So like we always advise, read almost anything if you have the time. But of course, if you want to really make the best out of cryptocurrencies, right? Read, read, read as much as you can. So these are some other news you can find, posted in the last couple of minutes, months, weeks, days, and even years. You find them on Cointelegraph. Okay, this is one that was just posted 28 minutes ago. You could see 28 minutes ago. Paxos receives preliminary conditional approval for US bank charter. Now, Paxos is a stable coin. Let me show you guys what they are into. Let me go. Okay, this is CoinMarketCap. CoinMarketCap is a coin listing site, like I told you. So this is Paxos. It's a stable coin just like USDT. Paxos standard. So this is what they're about. This is their current market activity right now. Paxos price live data, right? And what is Paxos standard Pax? So this gives you, it says founded in September of 2018. Paxos standard is a fiat collateralized stable coin. That's just the point I want to prove to you. So let's go back to our news. So Paxos received preliminary conditional approval for US bank charter. The stablecoin issuer has nabbed a banking license. Wow. But it doesn't mean they will be doing any banking in the traditional sense. Okay, what does it mean? Let's look into the body of this news. The US Office of the Controller of the Currency, OCC, has granted today stablecoin company and PayPal collaborator, Paxos, a federal charter to form a national trust bank just the just the third such charter, just the third such charter. The OCC has granted. Okay, let me take that again. So that means Paxos is just the third charter, the third benefactor of this OCC, right? So the OCC has granted crypto native companies. So Paxos is joining the third guys, right? The third company that OCC, that's the controller of currency, is granting the US controller of office of the controller of currency, right? Has granted native companies. So Paxos happens to be the third. So Paxos joins custody from Anchorage, who was the first to receive a charter, right? So that was the first guys that received in January, and fellow custodian Protigo, which received their conditional charter in February. As with the previous two charters, the bank label is somewhat misleading in that Paxos will not immediately be handling deposit. Instead, they receive a fintech charter, a type of banking charter that was pioneered by former acting controller of the currency, Brian Brooks. This charter, right? We are looking ahead. We are still looking, and we are still getting to know what this charter is about. This charter permits Paxos to conduct activities such as custody services for digital assets, custody and management of USD stablecoin, reserves, payments, exchange, and other agent services. Other cryptocurrency services such as trading services and enabling partners to buy and sell cryptocurrency and know your customer as a service per approval letter from the OCC sent to Paxos General Counsel Dan Bosstein. All right. So this actually explains literally what this license is about, right? It is for it is for Paxos, of course. That's what they've been offering. So it's for Paxos to have custody and management of USD stablecoin reserve. So they have some amount they can keep. They have the right now to have USD reserve, right? For people who are for people who want to hedge their Bitcoin back into a stablecoin or their cryptocurrency back into a stablecoin, right? So this is part of the service a stablecoin offers. But here, this is what the license means. It means they now have the service, the authority, right? The authority to offer payment services, exchange services, and other agent services, other cryptocurrency related services. They now have a right to offer these services, such as trading services and enabling partners to buy and sell cryptocurrencies. And of course, I talked about KYC. So now see how a KYC. So if I think Paxos does not necessarily need a KYC. You don't need a KYC to be able to have your funds in Paxos, right? But with this that is being introduced, that this office of the controller of currency has introduced license, it has given to Paxos, means every user of Paxos in the US will require to provide their KYC. But sadly, this is one of the things that um, um, Satoshi Nakamoto, the creator of Bitcoin, wanted to eliminate. He wanted individuals to be able to transact anonymously, right? That was why he came about the cryptography, that was used in developing the, of course, cryptocurrency protocol, blockchain or Bitcoin protocol, right? So, but that's the news for that's the story for another day. That's a conversation for another day. So we're looking at what this implies, what this license means for Paxos. So I just read out in that paragraph what it literally means. So it gives them the power to render payments, services, exchange services, trading, and every other trading cryptocurrency, every other trading activity involved in the cryptocurrency space, right? So that's what it gives them. So they now have that license to trade in the US, right? So they're now a legal body that trades or that offers trade service, cryptocurrency trade services to US citizens. All right, so let's go down to the other paragraph. It says the letter knows that all of these activities are currently being conducted by the Paxos. Like I said earlier on, Paxos already offers these services, right? Trust company operating with a New York BIT license. The charter allows a new Paxos entity to become a federally regulated organization. So like I said, what this implies is that Paxos now has a legal backing to operate in the US, right, as a financial service providing entity in the US, right? So they've been operating before, but not resident in the US. What I mean by that is they don't have, an entity, an entity, yes, an entity, a playing ground in the US. So what this license does for them is to give them that opportunity or that approval or that backing to be able to trade as a cryptocurrency service provider entity in the US. So congratulations to Paxos, and the team behind Paxos. However, the OCC countered that they received sufficient information to make an informed decision. So they are requiring more information about every activity of Paxos to help them provide them with, um, a uniformed license, and ultimately determine that it is appropriate to grant preliminary conditional approval, right, to allow the organizers to proceed with the organization of the bank, right? The approval follows a string of high-profile wins for Paxos. In December, the company raised $142 million in a funding round, and in April, applied for a clearing license following a successful pilot for same-day stablecoin settlement with Credit Suisse, among other institutions. Now, let me explain a bit what Paxos is. I took you guys to CoinMarketCap, and gave you some details about CoinMarketCap. CoinMarketCap is a stable coin, just like every other stable coin in the market, right? So their price doesn't, go beyond $1. It's always $1. So it's pegged at the US dollar. Some of other stable coins are pegged on other maybe on other nation dollars or currency, but Paxos, USDT, and many others are pegged on US dollar. So that means it is one US dollar to one US dollar. It is one Paxos to one US dollar. That's what it is. So whatever amount you have in Paxos, whether it's $1 million or $1,000, as long as you leave it in any of these stable coins, it remains there. It remains same amount, right? It just gives you a stable hedge, against the inflation of cryptocurrencies. That's the idea for stable coins, right? It helps to stabilize. It helps people who put in. It gives you an advantage to hedge, your cryptos in a stable currency. So that's what a stable coin does in the cryptocurrency space, right? So this is Cointelegraph. So this is CoinMarketCap. So this is Cointelegraph where we got that news. So congratulations to Paxos. So like I said, this is where you get to find relevant news, breaking news and happening now. Of course, you can see that this was posted 52 minutes ago. And one of the things, I'm actually diverting a bit from what I intended talking about. I intended talking about the market price, the current market price, and of course the current market price, the market structure, the market cycle, where I mentioned earlier on, where I talked about the fundamentals you should understand about the market. There's always going to be a bear market and there's always going to be a bull market. Understand that, guys. Understand that in a financial market, especially in cryptocurrency, is all is applied in every financial market, but with our focus in cryptocurrency. Cryptocurrency experiences a bull run or a bull season and a bear season, or a bull run and a bear run. It is normal, right? So as someone who has been in this space, you should have accepted this fact. But if you've not been stable, or you've not been playing in this space, or you're just getting into this space, this is one thing you should know. It is normal that in the cryptocurrency space, in the cryptocurrency market, prices or projects or coins are going to experience bull runs and bear runs. You're going to expect dips, right? And moon season, right? Where coins are going to dip to the worst price, maybe below a, the previous lower high, right? Or above the previous higher high. So it is normal, it's a constant thing that happens in the market. So you should know this and know peace, right? So that's my advice for anyone who is involved in the cryptocurrency space. Then I talked about the Bitcoin price. Um, this video has lasted pretty long, so I don't want to take us into Binance and start looking at the charts. Let me take us, we already have a chart that we're looking at on CoinMarketCap, the Bitcoin chart. So I'll take us back there and we'll look at the chart. And right now, when we started this video, it was selling, yeah, it was still selling for $50,000, right? 0.368, right? And in the last 24 hours, it has done over $87 billion, right? That's pretty interesting. But of course, if it does more, right, the reds will be far behind, will be in the blues or in the greens, right? So let's look at the chart. Let's look at the charts. One thing I have to mention with you guys is when you're looking at a price chart, right, of any cryptocurrency, don't ignore the traded volume. Very important, because that's what is going to give you a clearer picture of the activity that is happening or that has happened or that is, yeah, that has happened or that is happening in the market currently at that time. So don't ignore the traded volume, right? Like here now on this Bitcoin page, you're going to see market cap, you see fully diluted market cap. So this is the fully liquidity that is available in the market, right now as we speak. Then 24-hour volume, this is what I said you should ignore. That doesn't mean you should ignore others that I mentioned. No, don't ignore, but pay more attention to the 24-hour traded volume, right? You should. Then when you're doing your research, if you're researching a coin, of course, you now look at the circulating supply, the total market supply, and all of that. But if you're looking at Bitcoin is our focus right now. So we're looking at a 24-hour volume. Remember what I said? I said pay attention to the volume. What does the volume mean? It means a measure of how much of a cryptocurrency was traded in the last 24 hours. That's literally what a volume means. So the figures you see under a volume tells you how much that cryptocurrency has traded in the last 24 hours. In liquidity, man, that's what it means, right? So in the last 24 hours, Bitcoin has done 18%. Yeah, considering the dip it went to in the weekend and of course, got back. Now, this last 24 hours also includes the last 1 hour, right? The last 1 hour that just passed. So it's not just a calculation of what happened yesterday. No, it's a calculation of what happened, what has been happening, or what is happening in real time. So this also includes the past 1 hour, the past 45 minutes. This includes it. So that's why you see the figures keeps updating in real time. So look out for the volume. The volume gives you an idea. Oh, is there enough money moving around in this currency? Should I trade this currency pair? Is there enough money moving around? Has there been enough money moving around in the last 24 hours? How much is it? Right? What is the percentage like? Right? What was it in the last couple of days? Right? That will help to form your decision and say, okay, I want to day trade this particular currency because in the last 24 hours there has been a lot of volume, right, in trading. There has been a lot of volume in trading, right? And say you just want to hold it for a day. So that is your call as a trader. If it's an investor, this will help to let you know. Of course, you shouldn't be looking at daily charts. If you're an investor in the cryptocurrency space, you shouldn't be looking at what's it called now? You shouldn't be looking at a daily time frame. You should be looking at 1 year, 3 months, 1 month, no, maybe 3 months, 1 year, and all-time high, right? That's what I mean all time. That's from when Bitcoin started trading to this point. That's what that all means, right? So if you're an investor, of course, an investor is expected to be a long-term holder. That means you should be looking at 3 months upward, right? So the the picture, the figures, or the information, the data you're able to get when you look at all of these things, all of these features, all of these, different options, will now help you to build your decision. Do you want to buy and hold this project, for a long period of time, for mid-term or for short term, right? So that's why we encourage everyone to read. When you read, you understand what the project is about. I've given you a couple of sites to find out, to follow the news, right? And of course, I cannot start giving you content on how to trade. But of course, I'm going to have a couple of contents on free contents, on how to buy a certain currency or how to go about it, how to check, how to look for it, how to check the market. A lot of contents will be coming to you guys, more these days. And if um, you have any suggestions, you have any suggestions on any topic you want me to talk about, please don't hesitate to uh, drop it in the comment section so that I will look at it and we'll talk about it. All right, guys. So thank you so much for your time tonight. Uh, I will be right back on your screen tomorrow. Right? Thank you, guys. I hope you're able to take out something from my conversation with you guys from my life tonight. I will see you tomorrow. Hopefully, um, Bitcoin will be trading above 50K and will pull smiles to a lot of holders, right? And maybe tomorrow we'll look at other cryptocurrencies that have been performing, below or above expectation, right? Binance have been doing pretty well regardless of what Bitcoin, of the dip in Bitcoin, it has been doing pretty well. Same with Ethereum, right? They've been trading and closing trades. They've been opening and closing trades on high notes, um, better than the performance of Bitcoin. So tomorrow we'll get to look at more cryptocurrencies, get to look at their price and look at their possibleness. So I didn't talk about Bitcoin's next hopeful next support level, yeah, or resistance level. So let's go to the 1 day. Let's go to the 1 day. So this is the 1 day. So right now, Bitcoin is trading at 51,289.174,879 cents. Right? This is what Bitcoin is trading. Now, if it continues like this, if it continues on trading sideways, right, and gathers momentum and builds support, if it continues, see, it's been trading at okay, it gained support at 49K. Now got a resistance at 51K, came back down to 50K, right? If it continues at 50K in the next, let's say in the next 12 hours, that means it has built a momentum and a support level for 50K, right? Hopefully in the next couple of hours, if it still continues at this momentum, there are chances that it's going to break above 50 and move towards 51, right? And that's not really going to take much. Once it gets to 51, there's a probability that in between is going to test these levels. What's these levels again? Let's look at these levels. This is still 51, right? So if it gets to 51,211, the next resistance is going to be 51. The next 51, the next resistance is going to be 51.9, 51 thereabout, 51.9 thereabout. You know, and that will be the next. Once it breaks this 51, right now it's trading at 50,005. $289, right? $50,000, $289, right? $50,289. So if it closes above, if he builds momentum on 50, on this 50, right, in the next couple of hours, there are chances that the next resistance is going to break out to 51,270. Once it breaks out to 51,270, there are chances that it is going to test a 51,762 991 thereabout into 52K in the next couple of hours. But if it closes beyond this 50 and goes down back and drops down to this previous support which was where was the previous support? The previous support, which was 49,955. If it closes below 50k that is trading right now, if it closes below 50k, 50k 289 that is trading at the moment, and closes at 49,955 resistance level, there are chances that it's going to come back down to 48, right? It's going to come back down to 48. Where is that 48 again? Before it comes out to 48, it's still going to test, it's going to maintain, it might maintain a level of 49.25 cents, 49,029 cents, right? It's going to maintain that level, right? And play around there, looking for the next momentum to head to a new high, a new support, I mean a new resistance or another support, right? So that is what we should expect. So we should be looking, it is trading at 50, 50, it is trading at 50,289 at the moment. So if it closes above this, chances are it's going to trade at, it's going to test 51,546 thereabout, up to 7, 8, and 9, probably 2 or 52k in the next couple of hours. So hopefully this is what we should be looking out for, and even more, right? So let's keep our hands, you know, open and watch the markets, follow the news, and you know, trade safely. So if you feel you're fragile, you can't keep up with the current state of the market, please move your funds to any of the stable coins and observe the market, and come back in when you feel very confident and comfortable. So that's it for tonight. Please, if you're able to watch this video from the beginning to the end, do me a favor. I would like you to comment and tell me if it was helpful, and how you feel about the video, and what you think I should improve on, or what you think I should talk about, or a currency or a coin you think I should research on, and of course give my insights on what the possible price could be. So thank you so much, guys, for being a part of this tonight. All right, blessings. Yeah, catch you guys tomorrow. Let's keep our hands crossed and hope that the price shoots up to what it is. So, like I said, let me know in the comment section if there's a particular currency you want me to talk about, and whatever it is you want me to talk about, and of course, give me your review on tonight's live. Right? Thank you, guys, for being a part of tonight's live. You guys are the real deal. Good night, guys. So I'm gonna first end the meeting on Facebook before I come back right to my Zoom. So, guys, that will be it for tonight. Bye bye.